Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, start the music here. Today is the Federal Reserve Day. Market's been pretty quiet this week. I would expect it to be pretty quiet today. And in fact, we've moved like one tick since the open. So it's going to be one of those days. It's going to be a very, very tight session. So I think we should just relax, chat a little bit, look at some things. I would come and check the charts though. All right, so here's the treasuries. Treasuries, well, actually, a little bit up. So, we did see that up move yesterday. That was kind of like, coming into when it was time for us to go, they had moved up, and that was a little surprising. But even then, that was still a small move. And then after that, just sideways. A little bit of a move here, though, I guess, in the 10-year. ES. Well, I would say it was a mostly negative day, although, like relative to the previous day, unchanged, right? Here's oil. Oil having a little bit of a breakout. I mean, at least from this range right here. Right? Should I make boxes? Right. We've broken out from this range. Or you could maybe even justify that it was like all the way back, right? But there's still some resistance above us in oil, right? Gold and silver looking good. Just kind of a little bit of mean reversion. Actually, something a little bit more than that in silver, apparently. It'd be interesting to see how that one turns out. Copper coming down too. Okay, so this is a metals thing. Wondering if there's maybe something from China that I missed. I don't think we need to worry about it too much. And here is Japanese yen. Hitting up into some major resistance there and bouncing again. And the dollar, well, lower than where it was yesterday. Remember yesterday we were at like 96.5 or something? Was it? Yeah. Now we're 96.3. That's actually starting to look a little... Wait, do we have a... I think I have a daily chart of this on it here somewhere, don't we? There we go. Yeah. Oh, that's just the 6J. I don't have a daily chart of the dollar. Well, anyways. But you can kind of see markets all... Like, when you really get into the daily charts, especially... What about ES? Well, ES is just always on a tear, right? Well, most of the other markets are kind of like pausing here. So I think that this turns into... We see how the Federal Reserve meeting goes. I think that the biggest thing... Well, okay, so this is a big Fed meeting. Because, one, we get to see what they say about all of this stuff happening, like Donald Trump trying to get rid of Cook and being able to install one person on the board. And will there be any dissenters? That's the first big thing. Will there be any dissenters? I suspect that there won't be. My expectation is that it will be a unanimous 25 basis point cut, because that's what the economic data supports. If there are dissenters, well, I think that there could be some dissenters on the conservative side that would say it should be a 50 basis point cut. It wouldn't surprise me to see maybe two dissenters again on the conservative side saying that it should be 50 basis points. But if we also get dissenters on the hawkish side saying that we shouldn't have cut, then we have a problem. Then we have a problem. Because I really don't think that the economic data supports that. And that kind of says to me that the politics is affecting their policy, you know? So, yeah, I think that the market probably doesn't like that. And it would probably result in the dollar dropping is my guess. But we'll see. Yeah, that one could be really hard to read it. Yeah. Okay. Man, for some reason my camera looks like way washed out today. What's with that? I have the light at the same. I'll just turn it down a little bit. Morning, Uzi. Oh no, we're where we want to be. Oh yeah. So the other thing is that you are going to get the projections, the dot plot, things like that. The market seems to think that we're going to do like 3 or 4 rate cuts and then we're going to pause. So it will be interesting to see how that matches up with the dot plot, right? What is your thoughts about NASDAQ COT reports being negative 33K net short this week? Well, so a lot of the kind of, I don't know which how to describe this particular group of strategies. But there's a lot of strategies that have been going short the equities. And for various reasons. Some of it is balanced against other positions. So I wouldn't read too much into that. Like, it is interesting that after what was a pretty positive week last week that they're negative. So I'm not gonna say like ignore it, but I wouldn't be like, oh well, if they're short, I need to go short. I think there's a lot of kind of technical reasons why they would do that, and right now the flows still look positive. It's going to change here soon, but at the moment the flows still look pretty positive. And of course, what really matters is the Federal Reserve meeting, right? When you have the Fed, everything is kind of on pause for the Federal Reserve meeting. It's kind of hard to see very far beyond that. And get that piece of information out and see where we go from there, right? Wow. So I'm just starting to browse Reddit, and I think this post that I just scrolled into here is the worst take I've ever seen on Reddit. Like, the way the narrative around this kid is being manipulated to turn him into a trans-loving liberal, he is going to need a miracle to make it to trial. Tyler Robinson isn't suicidal, I guarantee it. Yeah. Okay. Forget about that he was literally thinking of offing himself before the family convinced him to turn himself in. Are you kidding me? This is the most brain dead take. I tell you what, man. It really bothers me. I don't want to turn this into the whole stream. But if you're not as into the headlines as I am, you know what? Honestly, I'm just obsessed with this thing, right? They released the formal charges yesterday. The formal charges pretty much confirmed all of the reporting that had been coming out. I think that there was a number of pretty explosive details within the charges. Just that it so strongly reinforced this narrative that he was raised in a conservative family, kind of rebelled from his family, and then went down the leftist rabbit hole. Very much in those charging documents. And the left is so just completely captured. Like, they are convinced, no, he was a right-winger. It has to have been a right-winger. It's like they just can't imagine this world. It's, there's this narrative that they have to fit, and the prosecution has to fit this narrative that it can't possibly be that, like, maybe his mother actually knows him and what's going on. Like, come on. But to go on and say, no, he probably isn't suicidal, you've got to be kidding me. You've got to be kidding me. I mean, that kid's gonna die anyways, right? Like, who wouldn't be suicidal in that situation? Come on. Have you spoken with your buddy Jerome, Mr. Powell? Yeah, me and him, we go way back. I would be really surprised. This is kind of a really strange situation to talk about with the Federal Reserve meeting. I would be surprised if it wasn't a unanimous 25 basis point cut. And yet this is a situation where I think the chance of me being surprised is really high, Like, I maybe I'm being too cynical. But I kind of think that some of them might want to dissent. I don't know. I tell you what, like, one of the things that I've been thinking about a lot lately with this whole Charlie Kirk thing and everything is I really do believe that there are certain lifestyles and ideas that do you real harm, that do you real physical and spiritual harm. And we could go into all of the things that the killer was involved in that I think do you physical and spiritual harm. But the thing in this case, the one that I think is the most relevant to us as traders, is the cynicism. Because if you're a trader, that's just going to be your tendency. You will have seen things go a certain way so many times, you're just not going to be able to help but see the possibility of that happening, of the cynical thing happening. And you will kind of get a little bit of a rise of thinking about whatever that most ironic, cynical thing that could happen is going to happen. And you will start to default into thinking that that's what it's going to be every time. And the reality is that's not actually the truth. That is a mental bias that we have, and it is bad for you. It literally rots your mind. So anytime that I catch myself thinking about the cynical thing like that, I kind of have to catch myself, right? I think that everybody that's involved at the Federal Reserve takes the responsibility very, very seriously and tries to do what they think they should be doing based on the data. And I think that the data very strongly supports a cut right now. That's why my expectation is that they will cut 25 basis points and there won't be any dissenters. But we have to at least acknowledge the possibility that there is a lot of politics going on and that it could be a three-way split. So we'll see. It's kind of, you know, when you look at where the market pricing is at and everything right now, it actually gets really interesting because the market thinks that the Federal Reserve is going to come in and like cut 3 or 4 times and then stop. And that's exactly what I think is going to happen. And the problem with that is that we know that our market expectation almost always ends up being wrong, right? Like if you go and you look at a chart of a median, like consensus interest rate expectations versus the actual expectation, it's always dead wrong. So that concerns me a little bit, right? Because what are the two possibilities, right? The one possibility is they don't cut as much as we think that they're going to. And the other possibility is that they have to cut way more than we think they have to because there's a recession. I think that first one is unlikely because the rate is just clearly too high for our economy. So that kind of puts you into the, well, then we go into a recession sort of a thing. And I really hope that that's not what happens. So maybe this is one of the times where like we're pretty close to on. I don't know. We'll see. Oh, I missed this comment from Muhammad. I love to just look at the open interest and try and expect how auctions are trying to take place. Well, you know where I think that the open interest kind of gets interesting is if you can dissect it. So one of the things that you can do is you can look at, like for instance, in the Treasuries, you can look at the open interest in the 10-year versus the open interest in the 30-year and the different categories and try to, and there's other pieces of data that can kind of help you. I'm not super familiar with this, although, to be honest with you, but you can try to pull out, you know, how much of that is actually trades on the spread versus the outrights and how much of that is speculative versus hedging. And once you can kind of separate out those flows, then you can kind of start to do some interesting things, like catch these situations where the market is overly committed to a position and it can get stopped out, right? Because the problem with the commitment of trader and open interest reports is that they're late, right? Like hopefully by the time that information comes out, you already know like the general thing. And so that's where kind of one of the reasons why that information is valuable is the calculations that you can do from it if you're actually going to go into it that deep. Probably too advanced for me. I think it's something that we could get into, but I don't really have the time, fortunately.
Order canceled.
You know, I'm thinking about just turning the robot off. Let's leave it on to see what it's going to do, but I think it's going to do dumb stuff. Going to do dumb stuff today. Oh, this thread is actually really interesting because now everybody has seen the new information and they're all telling this guy, no, actually, you're just wrong. I can't help but comment on that. It boggles my mind. It just absolutely, like, trying to think about it just makes my head hurt. How anybody could be that stupid or that taken by a particular idea that they would just ignore the obvious reality of something. That people think that because of some random memes written on a bullet, that they know somebody better than his own mother. His own mother. His family, who has been dealing with this for a couple of years now, and they don't know what his ideology is? Are you kidding me, guys? It's just crazy. It's just crazy. I don't think that's anybody here on this stream. I'm just preaching to this is one of the problems as I really want to get out and say something and try and make a difference, and I'm just preaching to the choir. But I love it, and I love you guys, and we'll talk about it, right? I just, if after the charges were released yesterday and you read all of that, including the text messages, and still think that he was a right winger, you are messed up in the head, man. Like the internet has screwed up your ability to see truth. Seriously. And that strikes to the heart of what we do. I tell you what, you know what upsets me probably, like, if you want to trigger me? I shouldn't admit this stuff. You're going to use it against me. The thing that triggers me more than anything else is when people on the internet come along and they say, I think I'm better informed than you are, when they're saying things that are clearly showing that they do not have all of the facts, right? Like, I had all these people, I made a post on TikTok yesterday, and there was these people like, well, we know better than you do about this. It's like, so did you actually read the charges? It's only like 3 pages. It's not that, it's a quick read. It's not that hard of a read either. It's a really juicy read. Did you read the charges? And then they never respond back. Oh, you're super informed, but you couldn't bother to do even the basic research. Do I take too much pride in trying to be informed? Maybe. I'm at a computer all day, and I check the news regularly. I work hard. Don't get me wrong. I always got to put that in there. You know, make sure that the job knows you're working hard. I do. I work really hard. I work harder than most people, I think. Sometimes I kind of wonder, because like I feel like I get way more done than most other people, and yeah, people are always, you know, like, oh, you're on the internet too much. Well, yeah, I'm not though. It's just, you know, I check it like once an hour or something. Anyways, and then you get these people that are like school teachers that like, dude, you're with kids all day. You're not sitting there reading the news. Come on. Yeah, it's probably because they didn't read it or care about the facts at all. Yeah, so something that happened yesterday was it came up during lunch, and most of the people had not really read any of the news or anything, and they had only seen the more crazy conspiracy theories shared by people on social media. So that really struck me. It's just, we forget. Remember, the most difficult thing, particularly for us, is to understand what we know in relation to other people. Because we're not other people. And what we do is very different from other people. Most people do not sit on the internet all day and refresh Zero Hedge and Politico and Reddit all day. So they might go and visit Facebook once a day and just casually read what their friends are saying. One of them was, they said, oh, some people say that it was the Jews and some people say that it was Ukraine. Ugh. So that's another one. Remember I was saying earlier, there are certain lifestyles and beliefs that I think do you physical and spiritual harm. And we can talk about some of them specifically if you want, but there's also kind of like the tall tale signs that what you're getting messed up with is harmful. And I tell you, the number one sign I get is when they want to talk about the Jews, man. If they're constantly talking about, well, the Jews, they did this, the Jews did that, or what, run. Those people are not good for you. I'm not going to say that the Jews are perfect or anything like that. Like Mossad does crazy stuff. It's that organization can be scary. They're effective at what they do. Okay. And Israel is in a tough situation. Okay. They're basically entangled with a small, you know, what could be a country, a large enough group of people to be a country that literally want them wiped off the face of the earth. And when you're having a back and forth like that, you're gonna make mistakes. You're gonna get yourself entangled in some bad ideas, you know. So it's not like they're perfect or anything. But when you get these people that are just constantly criticizing Israel, that's the one of the best signs that what you're getting involved with is a bad idea. Satan loves to criticize the Jews. He's like, you gotta understand. Am I getting way too spiritual? I usually don't get this spiritual on stream, but Satan is incapable of light. So anything that is like truth that can actually help you to become a better person, he is incapable of doing it. Right? Everything that comes from him, every idea that comes from him is evil, is designed to make you worse, is designed to destroy your life. Right? And so if you think about, if you were that entity and you have goals, your goal is to destroy humanity. But you cannot use light at all. You cannot use knowledge to better your position or help people better themselves, right? What are you going to do? How are you going to form a strategy that is actually effective? And so his primary strategy is always do what worked before. Always. Hey, worked pretty great during World War II. Let's try it again. That's why he's always going after the Jews. That's what it is, folks. We approach news from a different angle, oftentimes compared to average people, but boy, oh boy, we are still just as susceptible to the news. That's true too. Yeah. I mean, I think if you want to be informed, one of the things that there's a lot of people are like, how can I be as informed as you are? Well, you can't. You can't without putting the time, right? You want to be as informed as I am? Read the internet all day. This is really the only way to do it, right? But I do think if there's like certain news sources that are better than others, I would always recommend going to financial news first. Because the incentives matter. The incentive on the internet is to say the most inflammatory, controversial thing. Like this story with Charlie Kirk being assassinated and everything. It's has real legs now because the story behind it is kind of juicy. There's freaking journalists gushing about how touching the killer's text messages to his partner were. Good grief. Okay, but that gets clicks. That gets clicks, right? Whereas financial news has a completely different incentive structure, right? The people that are consuming the financial news are trying to make money. And so they are incentivized to push information that people think will make them money. And that has its own set of flaws, but it tends to give you more accurate information about things that are going on, at least. Right? What happens there is you get really good information about companies, but they kind of end up focusing your attention in the wrong spot often. Okay? Right? Like if you're always investing in the stock that they're talking about on CNBC, you can lose money. I'm invested in how social media is investigating older cases and starting to realize something odd in the world is happening. So what do you mean by that? Like, do you think that people are starting to realize, because ultimately, use financial vis, like the thing that I think has been outside of financial issues, one of the things that I think I've been the most consistently crusading against is extremism on Reddit. You know, like that really irks me. I thought that Dig was the coolest thing. Always like Slashdot, like that kind of site, that kind of news aggregator, social media website, forums. It's always very active on forums before all that stuff came out. That's like my favorite thing, and I just can't stand what people have turned it into. That you just can't go anywhere now without encountering batshit crazy political extremism on both sides. And the issue is if somebody goes out and says crazy right-wing stuff, you're immediately banned, right? Because they're going to be saying racist things probably. And that's easy. You immediately get banned. But on Reddit, you can say all of the craziest left-wing stuff, and you'll get banned if you don't say that stuff. And it's kind of crazy to me that it's taken us this far to even start talking about it, and they're doing everything to avoid actually talking about the issue. It's like, first we had to get hyper focused on trying to prove that he was actually a right winger instead of a left winger. Because why? Because he had a picture of himself dressed as a chav once, and he posted some memes, and they think that a right winger would be more likely to put memes on bullets than a left winger, apparently you know him better because of the memes than his own mother and family is. Okay, super crazy. They're super obsessed with that, right? And now that that's happened, they're starting to get obsessed by all this stuff like, well, the text messages must be fake. The charges must not be correct. The state is just trying to build a narrative that's not correct, etc., 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 right? Instead of talking about how are we going to change the way that we moderate on Reddit to reduce extremism, doesn't want to talk about it. Because I just want to get back to good, clean internet fun. You know, I'm in your computer stealing your megahertz fun, right? It's just lolcats and all your base and then that kind of stuff. And everything is turned into brain rot and cringe comics and political cynicism, extremism. And it happens both sides. On the right, the whole thing that's going on right now on the right is Candace Owens says that she has information that that Israel was trying to bully Turning Point USA, essentially, to try and blame the shooting on Israel, which, again, like, I don't trust her one bit. I don't trust her one bit. Why? She's always talking about the Jews, man. Telling you, that's like the number one. Like, it's okay if somebody can criticize them when they're worthy of criticizing and support them when they're worthy of support, but when they're constantly talking about it, bad for you. It's bad for you. The dead internet may be a real thing in the future. Well, my hope that, well, I think that the way forward is to put a greater focus on small communities. See, what really happened was Facebook came along, and when Facebook and then later Twitter came along, all of the sudden 128 characters could reach the whole world. And we became so enamored with that we realigned everything on the internet towards that, towards convincing people to compete for virality. And what we need to do is we need to shift the internet back towards small groups, that you can go everywhere, but you're going to have 2 or 3 small forums where you know the people there really well, and that it's not just based on like political extremism. It's the thing, right? Small communities like what we have here on chat. It's just a few dozen of us. We're here every day. We know each other really well now, right? It's the way that the internet should be. That's where I think that the internet is at its most powerful. That's actually more powerful in some respects than the whole, like, I'm just going to be the most popular person on Twitter and people are going to be hanging on my every word. So we've already kind of seen how that goes, and it kind of seems like it doesn't go anywhere good. Now, on the dead internet theory, another thing is that I don't think that, like, humans are not participating on the internet or anything like that. But I do think that we vastly underestimate the amount of bots out there. We vastly underestimate the amount of bots out there. one of the things that I saw was there were so many comments out there talking about groypers. And then all of a sudden, it's just they all evaporated. There's still crazy people trying to convince me that they know more about this guy than his mom does. But it's like I get like 2 or 3 comments, whereas I was getting hundreds of comments before, right? So I'm almost certain that there are other countries putting out a lot of bots and generating a lot of comments and stuff to our detriment. I think that there are political parties that are doing that. You know? Maybe at some point, I don't know. It kind of seems like it's going this way already, right? Like with the whole thing with the porn ban, right? You have to verify your age and everything. Like, I'm kind of feel like that more and more stuff is going to go that way. That like, if you're going to comment, like you can comment anonymously, but you're going to have to verify your real identity to the company first. To prevent bots, because it will get to the point where there's so like the bots are so obvious and overwhelming that people don't want to participate, and then they will flock to the platforms where they can prove that they're real people. And or legislators might get involved and just say like, okay, if you're going to comment, like your age and general location needs to be shown. I think that if you had to show your age and location on every post, like the internet would be completely different. Everybody on Reddit would realize, oh, most of the people that are saying all of this crazy leftist stuff are from Europe and not America, right? Or they'd be like, oh, I've been arguing with a 14-year-old this whole time. You'd probably think about it differently once you knew that that's what was going on. You know, I just remembered there was something I wanted to do here real quick. Let me pull this up.
Order.
Yeah, more personal data harvest regulations. Yeah. Like if it goes that way, companies aren't going to complain, right? That's just more data for them to harvest. Do you recommend any academic papers on market making models or more open source sites like Archive? Yeah, well, dude, Archive is the best. I don't have I usually have the book next to me, but it's in the thing. But there's a book called Financial Markets Under the Microscope, or Trades, Quotes, and Prices, Financial Markets Under the Microscope by Jean-Philippe Bouchot. And Jean-Philippe Bouchot is the curator for the quantitative finance section of archive.org. And his book basically gives you a really good synopsis overview of the key market microstructure and trading research over the last 30 or 40 years. And once you've kind of read through that book and you have like that solid foundation, then the papers that you go and you read on that section in archive.org make a lot more sense. And it really gives you a good foundation of like the key things that we know about markets that I think a lot of retail traders get wrong that can be really beneficial to you. So, yeah.
Order canceled.
Oh, you're reading through that book. Very good. Yeah, that's the way to start. Sure. Okay. Curious how the IV range projection will look on the rate cuts. So, it comes back, is it substantially different today? Probably it's not, because probably the IV that we're looking at is not a daily IV, huh? At which point, I kind of have to wonder if we were looking at daily options IV, how would that do? Ooh, up to 20% up on compression outfits. Man, they got new cool jade ones. Not much different, but I have a good idea how it'll play out. Okay. We did, by the way, get a little drop. We did have some housing numbers. I don't know if there's, let's see, housing starts change negative 8.5 versus an expected negative 4.4. You think the 30-year volatility will constrain the other treasuries? That's interesting. So if interest rates go up, it will steepen again. That's probably why it is the way it is, right? It's probably the options makers they want to be long, and they want to be long steepeners. Although, I think this is probably a case where seeing where like the largest strike prices are and things like that might matter a lot too, huh? Well, not just, there's a fly in here. Not just that, but like being able to see the overall gamma, because if we blow through those areas, or there are some spots where the options makers, market makers, have to start buying or selling more. That's the thing I notice, is the 30-year always has double-digit IV and infrequently tests the standard deviations. But big news events will make the 30-year transverse that whole projected range and make the others below their standard deviation. Ah, I see. Well, that's interesting. Back in the day, when I first started doing this, like back in 2016, it was very much the case that like people loved to trade the 30-year. Like there was a lot of traders that had made really good money trading the 30-year. Because at that time, the 30-year prices were just insane. And the volatility in them was just insane. And so especially if you were like an effective swing trader with it, those guys were making bank. And kind of what happened was, as soon as I came in, the volatility is all contracted significantly, and it wasn't the same moneymaker that it was. And now everybody just wants to play equity futures. You can play off of the other Treasuries IV standard deviations. Well, I think we would need another part, right? Because there's one thing to say this particular line matters, but it's a completely separate thing to say there's a behavior at this line that is extremely consistent and we can confidently execute on. I kind of think that what we got right now, understanding of it, is kind of like could keep you out of some bad trades, right? Could definitely keep you out of some bad trades where it's like, okay, we're really getting some momentum. I think this is going to continue. I get in, and then like it's right at the standard deviation, and it reverses on you, and you're like, oh man, right? That doesn't mean that you can trade that reversal off of that every time and make money overall, but it's probably not a good place to enter a position, right? I think having a good handle on the movement ratios between the treasuries is probably my missing ingredient on building a strategy around it. Okay, that's interesting because can't you just use the duration and that be your number? I guess bar charts probably doesn't have that though, huh? Let's see, how did we do this? Options, quotes. For every one tick the 30-year moves, how many does the 10, the 5, and the 2? Yeah. Yeah, no, totally. Well, we can calculate that. It changes throughout the day. But if you went in and you did the same calculations that you're doing with the IV at the beginning of the day, it might reveal something interesting. Let's see here. It's been a while since I've looked at this, so let's come in and look. Rules. And gets the treasury analytics that we want. What's this? IC spreads. I mean, you can definitely use the spreads that they get for these. That'd be one thing. Like you know what the spread difference, what the ratios are difference are for the spreads, and you know what direction the spread is going right now. Like the 2-year is 2.9, the 5 is 3.76, the 10 is 3.29, and the 30 is 3.25. Kind of. This is not actually the tool I was looking for, though. Is it the deliverable basket that I want? There it is. Duration. Yeah, well, you could just use the ATR, possibly. But I think it's more than that. It's like, I don't know. I guess I don't know what it is that why you feel that that's the missing part. At least for a rough estimate of an entry window. So like, I'm trying to remember what is the, there you go. I think what you really want is like some of these things like, basis net of carry and implied repo rate. So if I come in here to duration 6.056 and then I change it to the T-bond 12.2448, and I would expect the duration to tell you a little bit about how far it's going to go. And if I come to the 2-year, wow, it's super low. But then if you come back to like the bills, then you start to see duration go up again. Because duration is actually a measure of how much will this thing move for a basis point change in the interest rate, right? So like you can come in and you can say, okay, if the Federal Reserve were to defy all expectations and not make an interest rate cut today, that's a change in these expectations of 25 basis points. So then you would come in here and use the duration and say, okay, so if it's changed this many basis points, this is how much it's going to change the actual price of it. Yeah. Well, yes, DVO1 is, yeah, you're right. I misspoke there. The DVO1 is the actual dollar value of a basis point on the future, right? But duration is more of a measure of how sensitive that is. I don't know. Maybe I think you get duration, futures DVO1 and duration are maybe kind of different measures of the same thing. This may be how we should look at it. We could just say let's look at DVO1. You could just use DVO1, right? Because the way that they use it is they look at the DVO1 and then, you know, they look at it between the different spots on the curve, and then that's how they determine what ratio to use, right? But for you, probably what you don't actually want DVO1, you want TIX01, right? You want how many ticks is equal to a basis point. Something like that. Which would be basically like 142. Well, let's see here. It's 32.25, right? So 142.13 divided by 32.25. It's 4 ticks. Versus 10-year. 65.30. Oh, wow. 65.3 divided by 15.625. 4.14. 4.1792. Okay, no, I think I'm wrong here, huh? Because the volatility of the 30-year over here is definitely more than the volatility of the 10-year, isn't it? $30 ticks in ZB. 28 ticks in ZN. Oh, actually, it's really close. Okay. Okay, maybe I'm right. You just convert futures DVO1 to ticks and then use that as your ratio. Or to put it another way, the difference that you're seeing in, you know, this one
Order canceled.
will tend to go to its projected range, and this one will come short of it. The reason that that happens isn't because the 30-year is more volatile than the 10-year. It's because of the spread trade. In this, if we are steepening, if we're bull steepening, then the 30-year is going to go further than the 10-year is going to go further than the 30. So you can't actually game out which, you know, how it's going to go like that unless you have a really good idea of which way the spread is going to go. And then that just comes back to this issue, which is that on a short time frame, we seem to have a very difficult time being able to predict when the spread is going to move in which direction. Probably because the biggest factor in what happens to the spread outside of news events is flows. Somebody really big actually coming in and taking a big spread trade. So we still come back to, you have to be able to predict the flows. And what do we have that can explicitly predict flows and spreads? Not very much. I think I've even asked ChatGPT this before. Thinking longer for a better answer. 30-year volatility is just a big window for taking spread trades. Yeah. Like the thing that always frustrated me when I was trading in the 30-year is you would take a trade and then it would start to oscillate in a 4-tick range, and my position would always be on the wrong side of that range. Like if I was buying, I bought the top of that range, and if I was selling, I sold the bottom of that range. And then it just goes just a little bit outside of that range, and you're like, oh, well, dang, that's all I can handle. 6 ticks, and then you're out. And then it flips around and goes the other way. Like that's another thing, is that it just seems to me that the short-term volatility is basically always ends up being a certain amount, so that anybody that's trying to scalp with a small account will just always get screwed over. Empirical work shows that the best short time frame predictors are recent order flow and order flow imbalance. Limit order book liquidity measures such as depth, spread, cancellations, volatility, recent price moves, macroeconomic news surprises, and dealer inventory / net supply signals. Several microstructure papers document these effects and show models that can forecast near-term order flow imbalance. Okay, so I don't think order flow explains a large fraction of short-term yield changes. Informational content of order flow. There's that. These are actually, I'm surprised that these are studies I haven't heard of before. Yes, let's see here. We have the order flow for ZB and the order flow for ZN, but how much of that order flow is due to trades in the knob spread? Do we create an order flow imbalance for spreads? Okay, now that's interesting. If you have the right CME market data, there are flags on orders that tell you if something is explicitly a part of a spread trade. Of course, that would only be for people that are directly trading the spread. It wouldn't tell you for people that are playing the legs, that are legging into things. Wow, this kind of sounds like what we tried in the past, right? Is we just came in and said, okay, when I see order flow over here, I'm going to assume that the order flow over here is part of a spread trade. and subtract that amount that you can account for on both sides, and then the difference is what's left over is actual trades in the outright. In the 2 and the 5, you can almost always take a play within the IV window, and in... Well, no, wait, what does that mean? Does that mean that if you want a trade where you can only enter a trade if we are inside of the projected range, that when you go into the 10 and the 30, that it's actually outside of that range so often that you wouldn't be able to take very many? That doesn't sound right to me, because if that was the case, then couldn't you just buy the options in the outright and always see them outperform? If you wanted to take standard deviation plays in the 2 and the 5 year, you'll get an opportunity every day, and you won't in the 10 and the 30. Because they're not getting to the line, or because they're past the line? Because they're not getting to the line. That, okay. Yeah. We need to quantify it. We need to quantify it. Like, okay, this is the projected range up and down based on implied volatility, and this was the actual range up and and this was the actual high and low of the session. High, low, and close, let's say, right? And then we compare the two of them. And perhaps you would find that we can pretty consistently, the range of the 30-year, or the high of the 30-year and the low of the 30-year, tends to be closer than what the implied volatility says. Then that suggests that what we should do is if we want to be options market makers and we want to sell options, that it makes more sense for us to sell options in the 30-year because it tends to underperform more. Because we should expect, but both options and forwards tend to underperform their implied volatility to account for the risk of holding it, essentially. People are taking those options to hedge themselves against a risk, and so they have to pay more than what the risk of that thing is actually of happening, right? That's an empirically proven inefficiency in markets that we know kind of has to exist for the whole options market to even really make sense, right? But it's curious that that effect is stronger on some parts of the curve more than others. If we can actually prove that that's absolutely true, because then what we would do is we would say, sorry, the news squawk was going because there was a central bank talking. Because then what I could do is I could say, okay, here is what we would expect the high and low to be based on the implied volatility. Or let's not say the high and low. Let's say the implied volatility calculated in 2 ticks. Okay. and then the high minus the open in ticks, and the open minus the low in ticks, right? And then we compare those three together, and we say, okay, how much was the high short, or how much was the high short of the implied volatility, and how much was the low short of the implied volatility, and then we select the larger of those two to account for which direction did it actually move, right? And then we look at that number, and we make a density graph of that amount, right? To say, how many times does it happen is going to be the y-axis, and the x-axis is going to be how much it underperformed, right? So we would expect the actual range to be less than the implied volatility range. So it should be below 0. And it should be something like there's going to be tails on both sides, but it's going to be like this, right? And then we can come in and we can do it for the 10-year, the 30-year treasury or whatever. And maybe on the 30-year treasury, we find that it's even further out, that they underperform even more often, right? But it could be that these distributions actually look different. Like maybe it is lower, but it's also more fat tails. Maybe if I make it blue, maybe there's like these really, really big, long ones. And it's actually more like this, you know? And then it's kind of like, oh, okay. So if you go short the options at the 30-year, you will win more of the time, but there's a fatter tail over here that you have to deal with, or whatever the deal is, right? Like the actual density function could be different depending on the duration. Maybe there's some sort of function where their kurtosis increases as a function of duration. I'm getting too many complicated words. I'm getting into stuff that I don't understand as well as I'd like. Because quantifying kurtosis is a complicated thing in and of itself, right? And then there's definitely, I know that there's definitely something to do with convexity. And how that affects your optimal option strategy. I don't know if that completely makes sense. Right. And then, oh man, I tell you what. Then on top of that, then after you've sorted all of that out, then there would also be, how would I translate that into an actual actionable retail trading strategy? Because I'm going to bet you that after you account for all of that, that it probably doesn't say, okay, so then I should just sell one option in the 30-year every month or something like that, right? But that's kind of the whole thing that I keep finding, is that when you really get into the statistics and everything, you're always going to find the statistics kind of suggest some sort of larger market inefficiency that really only large players can take advantage of. And at the base level, the smallest players are always left having to be able to predict what other people are going to do, instead of taking advantage of those higher level inefficiencies. Oh, yeah. I don't know if I worded that very well, but let's see what ChatGPT does with it. Did find useful statistics which give bounds or pieces of what you're asking for. But it says average daily spread volume for various intercommodity spreads. It didn't take that as is that true or not. It took that as a, oh well, that's a sharp observation. Here's why that might. There you go. Variance risk premiums differ across the curve, and long bond options often embed more premium relative to delivered variance. There you go. Okay, so that part they were noticing is true. Caveat is that the payoff is strongly conditional on curve dynamics. If you're structurally long or short volatility in ZB, but the main move is a big curve steepener flattener, ZB can certainly deliver outsized relative variance that wipes out the premium. Exactly. Tell events. Long bond options blow out around flight to quality episodes. In those times, the under realization regime breaks. You know, I don't think that we've seen that lately. We have seen a few episodes where there is a flight to safety in the treasuries, but not one where there was a flight to safety in the treasuries and ZB outperformed. Not since COVID, at least. When it was COVID, holy crap, that was wild.
Order.
It was kind of like happened so fast that by the time we realized what was going on, it was over. I don't know. I really think that we need to get like, I think the thing that would get me like, okay, yeah, we really should look into this more, sort of a thing, is Oh, by the way, what's going on with my window here? The thing that would make me like get really excited, like I really need to go and spend some quantitative work on this, is if you're able to take this thing and translate it directly into certain number of orders that I'm going to see come into this instrument, right? Basically, here's a piece of data that I think effectively predicts future order flow directly. Versus what we're seeing in the options are, okay, there's the risk premium changes as a function of duration. That's kind of base. It's not. I don't know if we can explicitly make money off of it, but it is something that we need to like pay somewhat attention to prevent bad trades. But we still need to get to something that's going to tell me that a flow is going to come in that other people aren't expecting. I don't think from how we're trading that works otherwise. Because the issue is, if I'm not taking scalps, right, then all of a sudden I'm playing a different game, right? Like everything that we're talking about there is like, well, maybe selling options and holding it through till expiration, right? So now all of a sudden we're not scalping. Well, why should I do that as opposed to swing trade stocks, for instance, right? Then at that point, if we were going to go down that rabbit hole, it would make more sense to try and make a momentum portfolio strategy with stocks or a momentum portfolio strategy with futures. So it's kind of like a larger strategic thing. It's like there's certain places through which edge can come from. Where are those that we're the most likely to have an edge in? Seems to me that for us that place is being able to understand the news and predict what other investors are going to do, you know? We can do it the way we can. Well, yeah, I mean, that helps. You know. Just could never do anything. Yeah. I want to do more. I do. You know, I think that one of my issues here, I think the main reason why the momentum portfolio things is attractive to me is when we're trading the treasuries, there's just the large portions of time where it doesn't really make sense to take trades in the treasury, right? It really doesn't make sense to take a trade in the treasury right now because we've got a Federal Reserve meeting today. And those gaps are so big that it's kind of makes you wonder, like, so then why am I coming in and scalping it every day, right? Well, I think at this point, one of the biggest drivers for why we want to scalp it is because that's what gets us closest to the action and helps us understand the market the best, which is our primary goal. If our primary goal was to make money, we would probably do something different. If our primary goal was just to make money, probably we wouldn't trade, right? But I don't know what we would do other than trade, so... Oh, no. I do know what we would do other than trade. We would make a platform to trade. Yes. And we would make a platform that would assist you in finding and incorporating all of these things on its own without you having to calculate it and think about it. Because the default retail platforms do not get into this stuff at all. And even if you get indicators, there are indicators and stuff that can kind of help you, but it's always kind of like not quite there, right? Because the reality is that there's not enough data, and they haven't incorporated the sophisticated enough tools. So really, we need to focus on making a platform first, and then we should come back to these ideas, right? That's what we need to do. Yes, it is time to go. You're right. Thank you. Okay, so I wish I could stream during the press conference, but I won't be here. I'll be in Discord though. So I'll see you guys there in Discord. Probably the paid Discord, to be honest. And yeah, so I'll see you guys there. In the meantime, stay excellent.